Please start, sir. Please unmute yourself, sir. Unmute.
Good morning to all of you. It's a very happy occasion that we are having a national webinar organized by our Institute of Administrative Management in collaboration with a national body called the Association of Mutual Funds of India. This has also been a part of your syllabus. More than that, AMFI is the apex body. It started in 1995. And all the mutual funds, about 45 of them, are registered with them, right? So it is a self-regulatory kind of an organization. SEBI is the watchdog, but AMFI works very closely. And what I've always found is that there's a lot of this kind of investor awareness. So today, as you know, the world has been going through a global turmoil, right? Last 1 year. But basically what has happened is the Sensex has remained more or less at 60,000 levels. The main reason being the domestic investors. And that is a lot of credit should go to AMFI for educating and saying that mutual fund sahi hai. So now we get about 14,000 crores through SIP every month. So therefore what has happened is that even though the FIs have sold, but because the mutual funds in India and the investors have bought, it has not led to any downturn in the market. Why this is very important for you? Because you are just about to start your career. I'll just give you a small example, which we have done, but I'm repeating it because we keep on forgetting it. Through a very simple example, when you're talking of investment, you're talking of wealth creation, all of us want to be prosperous. 15, 15, 15. It means if you save 15,000 rupees for 15 years at the rate of 15%, you'll be able to amass 1 crore. But if it is 15, 15, 30, that means 15,000 rupees per month at 15% for 30 years instead of 15. Your corpus will not be 2 crores or 3 crores, it will become 10 crores, right? So this is the called the eighth wonder of the world, the magical power of compounding. One thing, please note what has happened. Most of your father, our father had a pension. Most of you, when you retire, there is no pension except the national pension scheme. So you will have to think about your future. Second thing that is happening is that people previously used to live till average expectancy was 70, 72. Now the average expectancy is 90, 95. You people can expect to live till 100. So if you retire at 60, you have to think of 40 years. So one is no assured government pension scheme. Interest rates are coming down. So therefore, this thing of 15, 15, 15, why I'm telling you, it is relevant for you as you go tomorrow to your job. Start saving immediately. So that you get the span of 30 years to actually make your money compound, right? So today we have our principal was also supposed to be here, but because of some meetings, he had to step out of the office. If he can come back, he'll join us. But the best part is today is we have with us Dr. Agarwal and Mr. Suryakant Sharma. So I'm just reading out his profile. He is the main speaker today. He is a commerce graduate and a master's in law. He is also a chartered associate of the Indian Institute of Banking and Finance. He has 35 years of experience and has worked in SEBI for more than 15 years in different departments of SEBI. Lastly, he was the DGM in charge of the Office of Investor Awareness. He is also a member of the working group of NCERT for developing vocational course on mutual funds. Nowadays, from school itself, this is being started. So, under his supervision, more than 15,000 financial literacy and investor awareness programs have been held. And after he retired from SEBI, he did not hang up his boots, but he has joined the AMFI as a senior consultant. Even during pandemic, Sri Sharma interacted with thousands of investors through more than 250 webinars, right? So that is the whole idea. When I think when we were 21 like you, 22 like you, we never got this kind of exposure. You are lucky to get this exposure. So now I will invite Mr. Suryakant Sharma to basically take over the proceedings.
Thank you very much. Thank you very much. Am I audible to all of you, sir?
Yes, very much, very much.
Thank you. I am honestly thankful and honored that Dr. Mukhopadhyay has remembered me again. And very honestly speaking, I am happy to be with all of you. You are young minds. You are the future of the country. And Dr. Mukhopadhyay has set the ball rolling as far as the today's proceedings and my session is concerned. My dear friends, this program is from Association of Mutual Funds in India, AMFI. But I wish to make it clear that this is not a marketing event or promotional event of mutual funds. It's purely an investor awareness program. And if Dr. Mukhopadhyay will permit me, or rather desire me to speak more on mutual fund, then I will alter my session accordingly. So I will just ask him, sir, what is in your mind? What I should speak more?
So I think sir, it is very nice if you speak more on mutual funds, because that is also a part of the syllabus and it's a very, very important part. As I said that because of mutual funds only, the whole market is stabilized. So please speak more on mutual funds.
Thank you. Thank you very much, sir. So nice of you. This program is from all of you. And of course, some of you might think, since I am not earning, why I should attend such program? Why I should pay attention to such program? My dear participants, as Dr. Mukhopadhyay has rightly pointed out, it is high time that you should also understand the importance of wealth creation. And unfortunately, middle class, salary class person are not so keen on creating wealth because they have got some taboo, some mindset that we will discuss afterwards. But I want to encourage all of you, please be wealth creator. Normally, my generation had thought that wealth creation is not our cup of tea because it is the domain of big businessmen, industrialists. They create wealth for themselves and for the country. But that is a wrong notion, my dear friends. We all have to be wealth creators. So please, please, please be attentive right from the first month when you start earning. Because early you start, better will be the proposition, better will be the result. And for that, how we can create wealth? Before coming to the mutual fund, I just want to take 5 minutes of yours to let you know what is wealth creation. And simply, and I will try to make my session as simple as I can. I will not make it a technical session. Your faculty members are there to teach you on the technical aspects and other aspects of the investment. But I, as a layman, wish to explain you what is wealth creation. And my dear friends, simply speaking, wealth creation is that my money should also make money for me. Normally, we keep our money idle. My generation was very conservative. We were not investing our money which we were saving. We were savers. Of course, we were savers. Because you might be aware, Indians are still one of the best savers in the world. So that is in our DNA. We were savers, but we were not wealth creators. We were simply money accumulators. And please always keep in mind the difference between money accumulation and wealth creation. Money accumulation simply means I keep my money in a most conservative investment products, which hardly beats even inflation. And most of us in my generation were happy that we were earning something. But we had never clear idea what is wealth creation. And simply speaking, wealth creation is that whatever return on I get on my investments, definitely when you will make investment, you will get some return sooner or later, bigger or very big. But that return must beat inflation, and that return must also take care of a tax liability on return, if any. So the real return, my dear friends, is after factoring in inflation and tax liability, if any, on returns. And whatever remains is real return. And we have to work hard for getting maximum real return on our investments. And we must not satisfy, which my generation was, on notional returns. So the first request I want to make all of you, please make sure that you earn real return on your all investments. Because this real return only is going to create wealth for you. Otherwise, you will simply be money accumulators. So you have to be wealth creators. And how we can create wealth? Professor Mukhopadhyay had very proficiently spelled out the notion of wealth creation and how we can do it and what is mutual fund industry and all these things. I just want to tell you very clearly that for wealth creation, you have to take risk. Because my generation was absolutely averse to taking any risk, very honestly speaking. Are Baba, risk ki baat mat kijiye. This was our funda, very clear perception of my generation. We don't want to take any risk. That is why whatever investment products were available in my time were conservative products. They were not, honestly speaking, create real wealth or real return for all of us. They were hardly beating the inflation and tax liability, if any. But I will encourage all of you, please do consider taking risk, at least in the first 15-20 years of your job or service or profession or business, whatever you do. So first 20 years minimum are going to be golden period for all of you to create wealth. After that, of course, your family will expand. You will have more family obligations, family liabilities. So there would be pressure to go for the safer products. But in the first 20 years of your career, please do think of taking risk in investment. And what is risk, my dear friends? Simply speaking, risk in investment is I might lose some money or I may not get anything on my investment. But please do accept that risk is there in most of the investment. But we have to see that we take our risk in such a manner that by taking risk, we try to get higher return on our investments. And you must have read a idiom, more risk, more reward, of economics. If you take higher risk, there is probability of getting higher return, but my dear friends, no guarantee. Please don't think that you will get some guarantee if you take high risk. But of course, probability of getting higher return would increase. So please do take risk in your investment in the first 20 years of your life, of your active life. Active life simply means when you start earning. But your risk has to be calculated. And second thing, please do develop a financial plan of yours when you start earning. It's very, very important. And what is financial plan? Nothing, no rocket science, very simple thing. You just jot down what are the milestones in your life for which you will need huge money. When those milestones are likely to come, and what money you will need for which milestone and at what time. If you draw this financial plan, then broadly speaking, picture will be clear before you. What money you will need at what time for which milestone or for what purpose. And this financial plan will give you a direction. It will develop a goal-oriented approach for investment. And that will pay for your success in investment. So I will request all of you, please do develop a financial plan of yours when you start earning. And one more thing, Professor Mukhopadhyay had rightly pointed out, and I should repeat it. Rule of compounding is eighth wonder of the world. Rule of compounding is eighth wonder of the world, my dear friends. And rule of compounding investment, simply speaking, is nothing but to commit yourself, to make a promise with yourself that whenever and whatever return I will get on my investment, definitely when you will invest, you will get return. So maybe may not be tomorrow, may not be today, maybe tomorrow, day after 1 year, after 2 years, after 5 years, return will definitely flow in. So you have to make a commitment with yourself, not to others. You have to make a commitment that whatever and whenever I will get some return on my investment, I will never use that return for my personal consumption. Rather, what I will simply do, I will club that return with my regular investment, which I am making out of my salary or income, and reinvest it. So reinvesting of return over a period of time regularly, with commitment, without fail, is going to play magic in your life as far as money is concerned. So please do religiously follow rule of compounding in your investment. And if you follow it, of course, it will not be easy. Because down the line, suppose you want 5 lakhs rupees on some investment, your whole family will be behind you to go for some vacation, use that money for personal consumption, or for that matter, some celebration. But then you have to make it very clear, no, it is not the case for reinvestment. It is not the case for celebration. We will take care of celebration and other things through extra income or whatever we will be earning. But the return on investment will definitely be reinvested. And not only reinvested one time, regularly for a period of 5, 10, 20 years. If you do it, magic is definitely going to happen in your life. So please do follow rule of compounding. Now I'm coming to the investment products part. Apart from mutual funds, of course, some government schemes are there. Then real estate is there. Then gold investment is also there. And then security market investment is there. My dear friend, mutual fund, broadly speaking, is a part of the security market, but it is not wholly security market. In security market, you can invest through 2 options you will get. One is direct investment, where you will either be subscribing IPOs of the companies when they come to the public, or FPOs, follow public offerings, or you can purchase or sell shares of listed corporates through exchanges by a mechanism which you must be knowing. And if you are interested, next time, if Professor Mukhopadhyay will permit me, we will have a dedicated session on security market as such. We will discuss how security market functions, what are the stakeholders of security market, what is SEBI, what is the role of SEBI in security, in regulation of security market, and a lot of other related things we will discuss. Next time, we will exclusively talk about the security market. So there is a direct way of investing through IPOs and purchase and sale of shares. But my dear friends, there is an indirect way of investing that is called mutual fund. So first thing you have to understand that mutual fund is an indirect way of investing. You are not directly investing into a script of particular company or corporate, or you are not giving directly loan to the corporate. What you are typically doing here is you are giving your money to the experts, which are technically called fund managers. Why you are giving? There are 2, 3 broad reasons. Firstly, I don't have knowledge. I don't have knowledge of the security market. And investing in security market without knowledge is dangerous. Rather, I keep telling my participants in my sessions, please avoid direct investing unless and until you have knowledge of the market. But in mutual fund, you need not have knowledge of the market, because that part will be taken care of by the fund managers or expert to whom you are giving your savings. So the first reason why I am giving my savings to the mutual fund managers is that I don't have knowledge. They have knowledge. They are experts of the investments. They are experts of the security market and beyond. And secondly, I don't have time. I have my job, I have my business, I have my profession. So I don't have the time which is required to oversee and supervise and manage my portfolio in investment in security market. So that time is not available to me. That is why I am giving my money to the expert, which they have got 24 hours for managing our money. Third thing is, I don't have any experience in investment in security market. They people have lot of experience, 10, 15, 20 years or more than that experience in the security market. That is because of these three broad reasons, I am giving my money to the experts. And one ancillary benefit is also there. Suppose you directly invest into a security market by purchase or by subscribing some IPOs or purchasing some shares, then your exposure will be limited to those corporates or entities. But in mutual fund, suppose you are investing in a scheme, then by that scheme, you are getting exposure to a number of corporates. So the benefit of diversification is available and risk mitigation is available to all of you. Because suppose you purchase a share of a company and that doesn't perform well over a period of time or 1 year or 2 years, you will not be getting any return or income, or rather you might lose some money even. But in mutual fund, suppose you are investing in some scheme, your money will be invested not in one company, but more than one, more than 5, more than 2, more than 100 even. So your risk is diversified. If one company doesn't perform, 20% company doesn't perform, then 80% companies might perform, then your risk will be diversified and your return will also be average out. That is also the additional benefit of mutual funds. And for those reasons, people are now preferring mutual fund as an investment. And Dr. Mukhopadhyay was very right pointing out that today mutual fund industry has literally crossed 40 lakhs crores of rupees. The general public has reposed confidence in the mutual fund by giving them 40 lakhs crores of rupees of their hard-earned money, of their savings for managing their money. That confidence is building and increasing every day. And one more positive factor, Professor Mukhopadhyay had pointed out, more than 14,000 crore per month people are investing in mutual fund through SIP. That is systematic investment plan. And SIP is the best mode of investment for middle class, salary class person, particularly those who have got regular income on monthly basis. So you have also to think about investing through mutual funds. But again, I will not get any commission or any benefit if you invest. But mutual fund is nowadays a flare in particularly amongst young minds, young investors, youngsters like you. And I am happy to note that majority of the young people have started investing through mutual fund. And that too, the mode they have preferred is SIP, systematic investment plan. So what is mutual fund? Mutual fund is nothing but giving our money to the expert to manage their money, or rather indirectly I can say, you are employing or deploying some person, some expert to manage your money. And don't mind if you have 10,000. Don't mind you don't have 1 crore rupees or 10 crore rupees or 100 crore rupees. Even your 10,000 rupees can be efficiently and proficiently managed by fund managers. That's the beauty of mutual funds. But normally people do have perception that mutual fund is security market. No, my dear friends, this perception is not right. You must be aware that there are schemes in the mutual fund where your money will be invested into governmental securities. There are schemes in the mutual funds where your money will be invested into government bonds and securities. There are schemes in the mutual fund where your money will be invested into real estate and property. And my dear friends, there are schemes in the mutual fund where your money will be invested into gold, silver, and other commodities. And one more feature of the mutual fund schemes are, my dear friend, is sitting at Calcutta, you can invest in Amazon, Facebook, Microsoft, Apple, big names, big monoliths, corporate monoliths. You can invest through mutual fund in such big corporates as well, in other markets of the globe. That is possible through international funds. So mutual fund is beyond security market, what I wanted to convey you. But of course, majority of the mutual fund schemes relate to security market. Yes, it is a fact. One more unique feature in the mutual fund is, in mutual fund, schemes are available as per your risk appetite. Suppose you are in a position to take high risk, then good number of schemes are there where the risk is high, so the reward might also be high, but without guarantee. But those who are not in a position to take so high risk, then other schemes are available for them to invest through mutual fund. And thirdly, am I audible to all of you? Hello, am I audible?
Yes, yes.
Thank you. So in mutual fund, risk or schemes are available as per your risk appetite. If you are a high risk taker, schemes are available. If you are a moderate risk taker, schemes are available. If you are least risk taker, schemes are available. If you are not in a mood to take any risk, even for those, some mutual fund schemes are available. Likewise, in mutual fund, you can invest your saving even for one night. So as per time horizon of investment, schemes are available. There are schemes where you can invest your money for one night only. Those schemes are called overnight funds. There are schemes in the mutual fund where you can invest your money for a very short period of a week, or 15 days, or 1 month, or max 3 months. That liquid funds are available. Then you can invest your money even for a short period of 3 to 6 months. Ultra short-term debt funds are available. Then you can invest your money for 6 months, 1 year, 2 year, 3 year, 5 year, 10 year, 15 years. Equity, regular equity funds and debt funds are available. So in mutual funds, schemes are available as per your risk appetite and as per your time horizon of investment. This benefit most other products don't provide you. Some have got some compartments or some rigidity as far as the this investment horizon and risk is concerned. So in mutual fund, schemes are available as per your risk appetite and as per your time horizon of investment. You can select the scheme, start investing, and there will be a better wealth creation through mutual fund over a period of time. Broadly speaking, there are three broad categories of mutual fund schemes as far as security market are concerned. The first category is equity funds. Equity funds simply means your money will be invested into equity shares of the corporates, listed corporates. So as the name goes, your savings will be invested into purchase and sale of equity shares of the listed corporates. And you must be all aware, in equity shares, because of the market movements, risk is very high. Relatively, risk is very high. So those who can take high risk, like you, and rather I will encourage youngsters to take risk, rather high risk, at least for the first 15, 20 years of your active life. So equity funds are broadly suitable for those who can take high risk and those who can invest for a longer period of more than 5 years, maybe 10 years, maybe 15 years, maybe 20 years, or beyond that even. So the first category is equity funds where you can invest. And that is, again, I repeat, broadly suitable for youngsters like you. Then the second category is debt fund. Debt fund simply means your money will be not invested into equity shares. Please understand it very clearly. It will be given as a loan to the corporates. It will be given as a debt to the corporates. And when debt or loan is given, the rate of interest is almost pre-decided in most of the cases, and even the tenure of the loan is also decided. So the risk is relatively less as compared to equity fund, but so is the return. So those who are not in a position to take high risk, those who are satisfied with the reasonable return, debt fund is a better proposition, better investment proposition in mutual fund for them. And the third category of schemes in mutual fund is hybrid funds. Hybrid fund simply means some of your money will go to the equity fund in the equity share of the corporate, and some of your money will go as a debt or loan to the corporates. So what is typically happening here is you are balancing your risk as well as your return. You are aspiring for a little bit higher return, but you don't want to expose yourself for high risk. And for those, hybrid funds are available. And even in hybrid funds, there are two subcategories. One is aggressive hybrid funds. Aggressive simply means almost 75% of your money will go to the equity funds, into the equity of the corporates, and 25% will go into the debt component of the companies. But in the conservative hybrid funds, which is the other category, it will be reverse. 75% of your money will be given as a loan to the corporates, and 25% or so will be invested into the equity share of the corporates. And even in equity fund, there are a lot of subcategories: large cap, mid cap, small cap. And again, in those subcategories are there, then specialized equity funds are there, sectoral funds are there, banking and finance equity funds are there. There is a lot of categorization even among equity funds. So whatever flair you have got, whatever wish you have got, choices are available for you, even in equity fund. Likewise, in hybrid funds also, I just mentioned choices available to you. And in debt fund also, choice is available for you. Suppose you want to invest for a one night, then overnight debt funds are available. Your money will be given for a one night only, and mostly not to the corporates, but will be played in the money market. If you want to invest for very short period of 1 week, 2 weeks, one month, then liquid funds are available. where your money will be invested into the money market. And I know a lot of my friends, Mukhopadhyay sir, who have started a practice, particularly young people. And the practice is, whenever they get salary in their bank account, of course, you will be getting it once you start working. So whenever you get salary in your bank account on first or last month of the day, you simply transfer your salary to the liquid fund. And that is all possible through app only now. No need to go somewhere else. You simply transfer your money to the liquid fund. Definitely you will ask me why we should transfer. There are two distinct benefits in it. Firstly, in your SB account, savings bank account, you will get hardly 2.5% return as interest, and that too on average basis. But in liquid fund, you will be getting more than 4% return even today, that too on daily basis. So why not to earn more return for your even for your short duration money? Likewise, in bank account, you can anytime withdraw your money. That facility is available to you. The same facility is also available in equity fund, in liquid fund. Suppose you got a salary of 50,000 and you transfer 50,000 from your bank account to the liquid fund. On 50, you need 5,000 for some grocery items or like whatever it might be. You go to the liquid fund app, because now everything is managed by app only. Put 5,000, click the withdraw button. Next second, 5,000 will be transferred to your bank account. So the money is available for you all the time as was available in your bank account. But the only limitation in liquid fund is you can't withdraw more than 50,000 in a day. That is the only limitation liquid funds have got. And please also keep this in mind. But even think of managing your money and getting high return even for a very short period. So liquid fund is a better way of managing your money for a short period. Then short-term duration short-term debt funds are available. Suppose you have to pay EMI after 2 months, suppose, and money is lying in your bank account. Why it should be left in your bank account? Better invest in short duration, ultra short-term debt fund. You will earn more than 5% return. For those 2 months, once 2 months is there, you can withdraw the money and transfer your money to the bank account and pay the EMI. So these are the propositions which you should think even for managing your money for a short duration. And in mutual fund, investment is very easy. And there are 2 modes through which you can make investment. One is direct mode. In direct mode, you visit the website of the mutual fund, select the scheme, and selection of a scheme is also not a rocket science. When you go to the scheme, in the preamble itself, lot of information is available with regard to the scheme. What is the risk appetite? Where your money will be invested? What is the duration of the investments? What are the other related factors? Who is fund manager? What has been the past performance of the mutual fund? All these information is available in the material when you click the particular scheme. So please read this material very carefully, devote your time, because ultimately your money. And you have earned and saved this money with lot of sacrifices. So selection of a scheme is again not a very tough task. Then the best way of investing, I was speaking about direct investment, that is visiting websites and of the mutual fund, select the scheme, give the information they want, and you are invested. But if you are not tax savvy, or you are not finding it comfortable to invest through direct mode, then other mode is also available. That is called regular mode. In regular mode, you will need to take help of the mutual fund distributor duly registered with AMFI. They will help you in investing your money in a particular scheme, but please don't ask them or don't leave them the selection of a scheme. That is your domain, and that is your, I think, privilege to select the scheme. And once you select the scheme, then you just call him. You just call him and request him to bring the specific application form for that scheme. He or she will come to you. He will help you out in filling the form, get your documents, and he will make your investment started. So, but in regular investment, with the help of mutual fund distributor, please mind it, they are not doing any social service. Definitely they will get some commission. On that commission will go out of your money or your return, whatever the case might be. But direct mode is preferred, and I will request all of you, please prefer direct mode. You are all tech savvy, you are MBA student, you can very well handle this situation, and please prefer your direct investment. So direct investment and regular investment, both options are available. As far as the periodicity of investment is concerned, the best way of investing in mutual fund for a middle class, salary class person, my dear, it is called SIP, Systematic Investment Plan. And my dear friends, SIP is a magic for all of us. You will not, you might not understand the importance of SIP, but when you start SIP and continue over a period of time, you will be happily surprised that there will be automatic wealth creation for you. Of course, it will not happen in a short period, but down the line of 15, 10, 20 years, you will have huge portfolio in mutual fund. So SIP is nothing but just like a recurring account. You might have seen your parents started recurring account, depositing a particular amount in every month or maybe fortnight. So you can start SIP out of your pocket money. Rather, I will encourage all of you, because the minimum amount of starting SIP is 500 rupees only. You can start SIP out of your pocket money, and down the line, when you start earning, by that time it would have been 1 or 2 years. By that time, you will have broad knowledge and experience also in investing in mutual fund through SIP. And SIP is a magic which I want to convey to all of you through a simple example. But this example is not a story I am telling you, my dear friends. It is a hard fact. But I will not name the scheme. I will not name the fund house. Otherwise, Mukhopadhyay sir might tell me, sir, you are marketing a particular mutual fund or a scheme, which is not my intention. But what I am sharing with you is a fact. In 1995, I just take the example of Mukhopadhyay sir only, because he is my friend also. I can take liberty to take his name in this example. In 1995, a mutual fund company, which are technically called asset management companies, started one equity fund. At that time, mutual fund was not so popular, but Dr. Mukhopadhyay was well aware about the mutual fund and in SIP investments. So he started an SIP of 10,000 rupees per month, which simply means he will be investing 10,000 rupees per month through SIP in that particular equity fund. From 1995 till 2023, he has regularly been investing 10,000 rupees in that scheme, which otherwise is rare. Why rare? Because normally people do start SIP investing when the market goes up. They feel happy. They are earning good return. But someday market melt down, someday market goes down. Your money, you might have incurred some losses, or even your principal to some extent. then people start panicking. अरे बाबा no, मेरा पैसा डूब जाएगा, my money will be lost, and they stop SIP. And that's the blunder, my dear friends, which Dr. Mukhopadhyay did not do. He was very clear, wherever the market is, whether market goes down, whether market goes up, he will continue investing 10,000 rupees per month as SIP in that equity fund. And again, I repeat, it is rare, but it is the only right path which he has chosen. Because you should understand, the basic character of the market is to go up and down. Market will always go up and down, always. This is the basic character of the market. Today market might be down, tomorrow again market will be up. Again market may go down because of a lot of other factors which we will discuss separately. So movement of the market is the basic character of the market. You should not feel affected by the movement of the market, which Professor Mukhopadhyay did. I don't know whether Professor Mukhopadhyay will permit me to mention what corpus he has got now by investing through SIP from 1995 to 2023. But I wish to share that corpus, and my dear friends, now he has a corpus of 12.48 crore. I again repeat, 12.48 crore. That's the magic of SIP. But again, I repeat emphatically, be clear, moment of the market will always happen. Never feel distracted, or don't even see the market. You are long-term investor. Invest for the long period, minimum 5 years, 10 years, 15 years, 20 years. If you do it, my experience says, and the historical performance data of the mutual fund also convey, that you will be getting good wealth created. So please think of starting SIP. And I know a lot of my friends who are already earning, they have started not one SIP. They have got 4, 5, 4, 6 SIPs, and all SIPs are target oriented. One SIP for purchase of house after 5 years. Another SIP for purchase of vehicle after 7 years. A third SIP for going on international vacation every 5 or 6 years. Fourth SIP for higher education and professional education of children, which is going to happen after 25 years. He already started thinking of the professional education of their children. Then marriage of the children, you can start a separate dedicated SIP. And last one, which Dr. Mukhopadhyay also emphatically told you, for your retirement life, you can start an SIP. Because for retirement, you will need huge amount. From where it will come? So please think of starting SIP even today when you are not earning out of your pocket money. The minimum amount of SIP is 500 rupees only. And to start with, you can start an SIP in a good equity fund or a good index fund, which are relatively less volatile. The other benefit of mutual fund is SWP. It is called systematic withdrawal plan. The first one was SIP, where you were regularly investing some money. In SWP, you are regularly withdrawing some money. But for that, you will have to develop a corpus. And basically, SWP is meant for your retirement life. Suppose even when you are 30 and you have started developing a retirement corpus, and for next 30 years, you have developed a good corpus, which definitely will automatically will be there. So suppose you have developed a corpus of 5 crore rupees for your retirement, and now you have retired. You don't have pension, you don't have any other income, your salary will not be credited in your bank account after retirement. How to lead a comfortable life after retirement? Yes, you can do it. If you have developed a corpus of 5 crore rupees, you can simply instruct the mutual fund manager that from next month onwards, start crediting my bank account by a particular amount, maybe 1 lakh, maybe 2 lakh, whatever you decide. They will religiously transfer this amount from your corpus to your bank account. And what will be the first benefit? On the first itself, you will get a reasonable amount for leading a comfortable retirement life. Second benefit is your remaining corpus with them, because you have withdrawn only 1 lakh out of your 5 crore corpus. So your remaining corpus of 4 crore 99 lakhs for the first month will continue to be invested and will continue to earn in return for you. So SWP is a very, very effective manner of leading retirement life comfortably, provided you develop a good corpus for your life, for your retirement life, and that is a must. So SWP is a proposition where you can enjoy your life, and not even before retirement. Suppose you need some money, you can withdraw at any time. Because redemption in mutual fund is also damn easy, my dear friends. Damn easy. You will take hardly 2 days, for another 3 days. Now the proposition is T plus 2. T means the request day plus next 2 days, 2 working days, of course. You will get your money back in your bank account. So redemption of mutual fund units are damn easy. At any time you can withdraw, and it is not like FD. In FD, suppose you have got open a FD of 10 lakhs rupees for 1 year. And after 6 months, suppose you need an emergency, because of some emergency, you need 2 lakh rupees out of 10 lakhs rupees. You go to the bank manager. What he will say you? Sir, no problem. Money is yours. You can get 2 lakhs rupees, but for that you will have to break the existing FD of 10 lakh rupees. You can take 2 lakh rupees, and there will be a new FD for 8 lakh rupees. But in the case of mutual fund, suppose you have developed a accumulation of 10,000 units after 10 years, which NAV of those 10,000 units are suppose 50 lakhs rupees. And you need 2 lakhs rupees for some emergency or whatever work you need. You simply write to them for redemption of units proportionate to the 2 lakh rupees. That will be credited to your account within 2 days. Remaining 40 lakh rupees will continue to be invested. So this flexibility is also available as far as redemption is concerned. And if you get lump sum money from your employer because of some bonus or some incentive, then the proposition you can invest in mutual fund is STP, Systematic Trust Fund Plan. STP. STP simply means, suppose you have got 5 lakhs bonus from your employer. The one option is invest 5 rupees in one go. No, that is not a good proposition. What you should ideally do, you should first put your 5 lakh rupees into some liquid fund for a temporary period. And out of that liquid fund, you start an STP, maybe 5,000, maybe 10,000, maybe whatever you want, from your liquid fund to the scheme where you wish to invest. So what will typically happen here? Suppose you have option, you have got the option of 5,000 rupees every fortnight. So out of 50,000 in liquid fund, 5,000 will go to your desired fund every fortnight for next 10 fortnights. What is the benefit? There will be automatic balancing of risk. Because suppose you invested today 50,000 and tomorrow market is down, your 50,000 may reduce to 45,000 or 40,000. But if you invest in such a manner that every fortnight 5,000 invested, then you are managing your risk, because sometimes suppose market goes up and market goes down. Automatically risk balancing will be there, and you will be earning return in liquid fund as well. So STP is also a good proposition when you have some money to invest in one go. Mutual fund otherwise is a big topic. I can speak on for next 1 hour more, but due to time constraint, I will request again all of you, please do start investing in mutual fund through SIP. And those faculty members who are already earning, they should think of starting multiple SIP Jeevan for their target-oriented, goal-oriented approach. And when you start earning, you can increase the amount of SIP or you can start another SIP. Because there is automatic facilities available of stepping up SIP. This you can even, suppose you start SIP of 1,000 today. Even today you can give a mandate that after 1 year, this SIP will be step up to 1,200 rupees. After two years, it will be step up to 1,500 rupees. So that facility is also available in SIP. So, what I want to request all of you is be an investor. And my dear friends, I don't know Professor Mukhopadhyay sir will agree with me or not, but in my opinion, next 25 years are going to be golden period of Indian economy. How many of you agree to me? Just raise your hand. Honest, raise. How many of you agree to this? Next 25 years are going to be golden period of Indian economy. But my dear friends, the fruit and benefit of expanded Indian economy will be available only to those who will invest, who will become investors. Because there are two categories of persons. One category, go to the stadium, see the match. If the player perform well, they clap, eat some popcorn, take cold drink, come home, they get nothing except temporary entertainment. But those who are playing inside the stadium, they players get everything. They get match fees. They get advertisement endorsements. They get celebrity status. Everything they get. Why? Because they have invested their efforts into cricket. So likewise, you should also be an investor. Because only investors will get benefit of the expanded economy of India. If we are not invested, we will simply be clapping for the expanded economy. We will get nothing. So I will urge all of you, be an investor. Only investors will get benefit of this. And last two things I want to tell all of you. Of course, you are very intelligent and MBA students, so I need not mention here. But it is my duty to say all of you, never, never, never invest your hard-earned money in Ponzi scheme, chit fund and committees. West Bengal people have been sufferer in this segment, you must be aware. Sarda, Rose Valley, big names have been there who have looted money of the general public. Why? Because they promise high return. They promise doubling their money in 4 or 5 years, which is not possible at all. You are MBA students. They don't have any business model. They simply take your money and they will vanish sooner or later. So what my request to all of you is, never, never invest your hard-earned money. And this request should not be limited to you only. I will request all of you, please start telling whenever you meet some person, or particularly those segment of the society who are not so educated. You are plumber, you are electrician, you are maid servant, you are taxi wala, you are canteen boy. Tell them, because basically they invest only with the greed, only with the knowledge, or only with the promise of higher return, which is not going to happen at all. So try to educate them, try to sensitize them that they should not invest their hard-earned money in such Ponzi scheme, chit fund and committee. And if they don't have anything, no problem. They should simply put their money in bank and post offices. At least their money will be safe. And last thing, and very important thing that I want to tell all of you, my dear friends, prosperity is not a luck. I again repeat, prosperity is not a luck. Prosperity is an effort. Luck is nothing. Forget about the luck, because normally we Indians believe on luck. But I am telling you contrary. Luck is nothing. You can be prosper by your efforts. You can be prosper by saving right from the day you start earning and putting your saving into the best investment mode. You all can be prosper. And my dear friends, prosperity is your right. It is your right to be prosper. It is not a begging anybody will give you. And prosperity doesn't mean you become Mukesh Ambani or some big industrialist. Prosperity simply means I should have money when I need money for my needs, for my desires, and for my hobbies, and for comfortable life. So prosperity is your right. We have to be prosper, but that is possible only through sustained effort in investment, through investments. And some of you might have some thinking, because some of you might be coming from a not so good, not so rich environment. So you think that I am from a poor family. No, my dear friends. Birth in a poor family is not a curse at all. Please mind it, what I am saying. Again repeating, birth in a poor family is not a curse at all. But living as poor and die as poor is a curse, which we all can avoid by managing our money right from the day we start earning. I hope if my session you have found good, then you will follow the path which we have just discussed, and you will all be prosper. This is my best wishes to all of you. God bless you all. Thank you very much.
So thank you very much.
तो मेरा कहने का भी यही मतलब था कि अगर इससे अगर 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 पिंटू जी ऐसे टाइप में रहता भी तो चलता, लेकिन वो नहीं बैठा, वो उसका माइंड सेट है, तो ये मैंने बोला ये कंजूस है।
Yes, Salwani ma'am, please ask your question.
वही तो मैं भी
Thank you very much.
मैं भी तो यही बोल रही हूँ ना कि अगर
It was a very nice session. And I am the first person to say that India is now a young nation of 75, 25 years, 2047, when these boys will be about 45, 46. It will be much more prosperous. India used to be 10th in terms of GDP only a few years back. We have overtaken Russia, Italy, France, UK to now be the 5th. We are knocking at Germany, should overtake Germany also. So the only way you can benefit is by investing in the equity market. And many of you will be directly involved, and those who cannot directly involved, they should definitely take the mutual fund route. So now I think there'll be some question answers. So can we have some questions from our students? Mr. Sharma, I just see any questions. Yes.
Yes, please, sir. Please.
नहीं, आप बोलो, पूछो. You tell me, I'll tell the question. Okay, Rishikesh is a very good student of ours. He's saying there are so many schemes. How does he select a scheme basically out of that? That's what he's saying.
Yes, Mr. Rishikesh, just to know about the mutual fund, I will at the first stage share you names of 4 websites. Please note it down, and all students should also note it down. These websites have very useful material on mutual funds, about their schemes, about the risk, about the return, about the historical performance. Please note down the name of those. The first website is Mutual Fund Sahi Hai. It has been created and developed by AMFI. Mutual Fund Sahi Hai. Very good website where you will be getting lot of material about the mutual fund, about the schemes, about the risk appetite, about the historical performance, everything you will get there. Please visit the website and devote time. Mukut Bajaj sir, I want to tell all of your students, there is no shortcut. There is no shortcut. You have to first get knowledge, and first-hand knowledge is the best knowledge. So the first website is Mutual Fund Sahi Hai. Other 3-4 websites I am mentioning are private websites. I am not marketing them. but I find them useful. That is why I am mentioning. Second is value research.
Value research.
Value research. Good website, have got of material. So please visit website. Third one is money control. Money control. Fourth one is ET money, economic times money. There are other 100 thousands of websites are there. I am not marketing them. What I am saying is, the name just I mentioned just out of fluke. Nothing specific. I want to tell you that limit to only 4 websites. But try to develop, try to get a knowledge about the mutual fund first. Take your time. Don't be in hurry, because ultimately it is your money, my dear friends. So after getting knowledge, you will have broader idea about the scheme which is suitable more to you. And for you, I can tell you, my dear Mr. Rishikesh, for you, you are a student, start investing in good large cap fund or some index fund to start with. By the time you start, you are in the scheme for 1 or 2 years, you will be master. Then you will start teaching others on mutual fund schemes. So thank you very much.
Next question. Sandeep, you have a question? Sandeep and Rishikesh have one more question.
Yes, sir.
They're saying that this Axis Blue Chip Fund. So they are tracking it as a student. They found that they had done a lot of good marketing, but last 1 year it is showing negative returns. So they say like how much? Minus 5.28. Of course, markets have been down also. So he says sometimes the mutual fund make a lot of promises, but actually the returns when it really comes become negative.
No, sir. First thing I want to tell you, mutual fund can't make any promise. You just share me any clipping or any promise from the mutual fund. They can't. They can't promise for any particular return. Of course, mutual funds are related to security market. And you all, Professor Mukherjee Upadhyay sir also mentioned, last year had not been a good year for equity. So naturally the return will not be there. But don't look at the short term, my dear friend. You are a student. Look beyond that. Take the return of 5 years, 10 years, 15 years. And you might be aware, my dear friend, who is Mr. Sandeep, last 10 years, most of the equity fund have given return between 12 to 18%. So don't limit yourself for 1 year. Be a long-term investor. Be a long-term investor. And once you are long-term investor, I can give you confidence, not promise, that you will getting more than reasonable return.
Ek minute. I'll come back. Any other question? Short-term schemes we are talking of long-term. Actually, one question, Mr. Sharma, I have on behalf of the students. We also are mentors here. We do career counseling. So the students are still, I feel, what we used to be 25 years back. They still want to join those big four, PwC, Deloitte, Ernst & Young. I feel today that the career is much better if they join a mutual fund industry than a PwC or a Deloitte. What is your view on that?
Sir, I am absolutely agree with you. Firstly, sir, whatever name you have mentioned is a story of the past. Time has changed, my dear friends. Come out of that story. I can promise you, mutual fund industry will reward you like anything, not only monetarily, but also career-wide progressions. You can't even think what fund managers are getting. You can't even think. And for you, I just want to, out of context, just want to mention one thing, sir. I will request all your students, please visit the website of NISM, National Institute of Security Market. NISM. NISM has been developed by SEBI by investing more than 400 crores of rupees. And it is going to be one of the finest security market institution across globe. NISM is offering lot of online and offline courses. Majority are online only, which you can do with your regular course also. So please do visit the website of NISM and select some courses. If you want to go for some trading, if you want to go some demat accounting, or you want to go mutual fund industry, lot of courses are there. Please select the course and complete those courses. And one more thing out of context, Mukaddev sir, I want to mention here. Mutual fund distributorship is also going to be a very promising career. Those students who want to remain in their local area, mutual fund distributor is a very rewarding career. I just give you an example, sir. I know one mutual fund distributor. 15 years back, he started his career when he didn't know anything about mutual fund, but he was a young lad. He started as a mutual fund distributor. Of course, he worked very hard. He belonged to Jaipur. He worked very hard. Because of his passion and efforts, now he has a corpus, SIP corpus of 1,200 rupees per month. And sir, he is employing 28 persons. And he is earning crores of rupees every year. So that is also a career. If you want to remain in your area, you don't want to move out of your city, then mutual fund distributorship is also a very good proposition. You please complete the paper, get the ARN number, start working for mutual fund industry, and down the line after 10-15 years, if you work hard, if you manage your team well, you would be earning crores of rupees. And even in SEBI, I want to tell you, Mukhopadhyay sir, the base officer level, which is called assistant manager, which is the first stage recruitment process, the annual package is 28 lakhs. So those who are aspiring join SEBI, because SEBI recruit only through direct recruitment only. Advertisement will be there. Just keep an eye on the SEBI advertisement. If you are interested to join a regulator, please, you are welcome to join. I rather invite you, all of you, to think of this option as well. So mutual fund has got lot of career opportunities as well and rewarding. So please do consider.
Any other questions? One minute. It's a very, very good question been asked. I think it's a problem with most MBAs. They just want to sit in an office and not go out and meet clients. They don't want to have any targets. So he's asking that, when people don't want to go out and sell, but selling is such a rewarding career, what is to be done?
Exactly. Sir, you have to work on yourself. You have to be a good marketeer. You have to be a good marketeer. And that trait has to be developed. And Mukhopadhyay sir is very right. My dear friends, selling is a very, very rewarding career. Very rewarding career. So come out of yourself. Think about yourself. And understand yourself first. Because Mukhopadhyay sir, there are some persons who are very good desk officer. They can work on desk. But there are some people who can work wonders when they go out and work. So ultimately it is your call, what call you take.
Yes. Any Rohit and Shoaib have one question, that instead of sales, if they want to become a fund manager, how do they become a fund manager? That
Yes,
is-
definitely you can be. After completing your MBA, complete your CFA first. CFA is a good degree to enter into mutual fund industry. Be an analyzer, equity analyzer, equity researcher. So for those, lot of courses are available. So you explore those options as well. You can not directly be a fund manager, sir. It is basically a culmination of after 10, 15 years. You join the team as an assistant. Down the line, after 10, 15 years, you will be fund manager.
Any other question from your side? How is there are lots of lady students here? How is mutual fund for these young girls?
Sir, there is no gender distinction between girls and boys. Equality is there in mutual funds.
What is AIF? Oh, alternate investment fund. Sir, can you tell us something about this alternate investment fund, AIF?
Basically, it is a new proposition. Where your money will be invested into newer projects. It will not be a conventional investment. There are other alternative avenues are coming in between in our economy. So your funds will be invested into different projects or avenues, but that will be distinctly and clearly spelled out before you. If you are interested, you can invest in those as well. Newer technology, newer industry, all these things are coming up in our economy. So if you are interested, and of course risk is greater there, please do understand, risk is greater, but so will be the reward.
Yes. Can you also tell us about this real estate investment trust, REI?
Yes, the same in real estate trust, sir. Your money will be invested into the real estate projects. There will be two category of these. First is in residential investment, and second one is commercial. In commercial, you will get rental and appreciation of the property as well. So if you invest in real estate trust, the income generated out of rent will be shared amongst the unit holders. Basically, it is for bigger projects.
Yes, Anuj. Okay. So thank you very much, sir. It's been, we want to, on my personal behalf and on behalf of Army Ministry of Management, we want to thank you, Mr. Sharma and Dr. Agarwal, who's been the coordinator, who has gone into such details. And we have a bright student here, Shalini. She's joined the mutual fund. So she will give a formal vote of thanks.
First of all, good afternoon. Am I audible, sir?
Yeah.
On the behalf of Army Institute of Management, Kolkata, and the MBA 25 students, I would like to thank you for being such a knowledgeable session and all the insights you have given about mutual fund and told us all the future investments we can do, and as well as increase our wealth. The major point you have mentioned, that is being a wealth creator, that has influenced me a lot. So that was an inspiring session. So thanks a lot, sir, from the MBA 25 and Army Institute of Management. Thanks. One more thing I want to add, that I am going to join as Tata Mutual Fund in a few months. So it is very fruitful for me also.
Congratulations. Great. Congratulations. on my behalf and on behalf of FANFI, I am thankful to all of you, particularly Dr. Mukhopadhyay, who has taken this initiative for organizing this program in your institute. I would be more than happy to come to your college as well, Dr. Mukhopadhyay, at the first opportunity. And then we will have detailed physical interaction with your faculty members and students. In the meantime, wish you all the best. And of course, special thanks to Dr. Sanjay Agrawal for coordinating this event with Army Institute of Management. Thank you very much. God bless you all. Thank you, sir.
From our side, we welcome you to come to our institute in Calcutta. And-
Definitely, sir. Definitely, I will come. Definitely, I will come.
And as I said, we may plan in the month of April, and I'm also thankful to the principal director of Army Institute of Management, Kolkata, principal of and finance chair, Professor Dr. J.N. Mukhopadhyay, to organize such a wonderful webinar. And I'm thankful to the keynote speakers, Surikant Sharma ji, and all the audience who have joined us from each and every corner of the country. So thank you very much. Thank you.
Thank you very much. God
So
bless you all.
kindly fill the feedback form and you will receive the certificate within 2-3 days.
Is this a feedback form or something? Have they given something like that? If they
It's in the chat box, sir. It's in the chat box.
but तुम लोग कैसे करोगे? How will you do it?